Hello, everybody. Colin Canizares here again. Want to talk to you today about refinancing car loans. Why is this important? Well, when you go car shopping and you have a credit score that's under 640, the chances that you're going to get an affordable low interest rate in your car loan is pretty much down to nothing. Firstly, when you're going into the car dealer, they love to say to you, hey, we'll go get you a deal. We're going to go shop you around to different lenders to get you the best rate so that you can get a payment that works for you. Okay. What they don't tell you when they're doing this is who they're shopping you around to. And you don't get to pick your lender. All right. And when you have made this mistake of actually getting a loan at the car dealer, which you should never do, you should go watch your own Carver's episode of the podcast #1, How to Buy a Car with No Down Payment. You never give the car dealer your social security number and you never let them pull your credit. You've made this mistake, and many people do, because the system is built to not be transparent so you have a good understanding. You end up with a bad auto loan at an interest rate 15, 20, 25, 30%. Okay. You'll end up seeing the company's names like Santander, Westlake, Credit Acceptance. But at the end of the day, it's all about what is that interest rate on that loan. Well, when you go out and you get a $30,000 car loan and it's 72 months, they've given you, say, a 24% interest rate. Okay. Your payment ends up being $700+ a month. And you're like, well, it seems expensive, but I can do it, and so forth. And they're happy to do the deal and get it closed and send you on your way. But when you have this high interest car loan, the chances of repossession is about 1 out of 3. 1 out of 3 of these high interest car loans end up getting repoed within 6 months. Okay. What do you do to make sure this isn't going to be the case for you moving forward when you are in this situation? Well, you got to go get it refinanced. Because if you even succeed in not getting the car repoed and you pay the car off in full, the $30,000 car is going to cost you $60,000 by the time you pay it off. $30,000 of it in interest. That's insane. That same car loan at 30%, you get it refinanced at a credit union for, say, 8%. You're only going to end up paying about $7,000 in interest, or $37,000 for that car. That sounds like a much better deal. But you got to make sure that you get yourself into a good credit score position in order to be able to go to the credit union and get refinanced at lower rate, right? You got to have at least a minimum of 650, which is sort of a B minus. But if you can't get up to that 720 to get in there, do that. Get yourself around car loan one-on-one for all members. If you're in that situation, you can get a game plan so you can figure out how you can get that score up to 720 as quickly as possible, so that you can get away from that crazy high interest car loan. The other beauty of that is that when you go in to do this, your car payment's probably going to drop $250, sometimes $300 a month. Think of what you could do with that. Stick that $300 in a savings account. All of a sudden, you got a $4,000 emergency savings at the end of the year. That's pretty good. So I hope this helps. Reach out if you need one-on-one. We'll be more than happy to help you.